Friends, this is a long question and 11th class of holding company, and you might have gone through the question. If you have not gone through it, please note down the question and start doing the problem with me. Thank you. Let us start with the degree of holding. If you read the balance sheet, in the balance sheet you will see in the asset side of A Limited 30,000 shares in B Limited and the 30,000 shares held by A Limited in B Limited. What is the total number of shares in B Limited? B Limited share capital is 4 lakh of shares of 10 each. So 4 lakh divided by 10. So total number of shares in subsidiary company B Limited is 40,000. Out of that, 30,000 shares are held by A Limited, that is holding company. So 30,000 by 40,000 into 100, it comes to 75% is the degree of holding. Then rest is the minority interest. The minority interest comes to 25%. Then pre and post acquisition. In this problem, especially adjustment number C, it is telling that A Limited holds shares in B Limited from the date of formation of B Limited. When the B Limited has been formed, started, A Limited holds the shares. That is your date of acquisition is the date of formation. This is a typical word which is different from the other problems what we have already done in the last 10 classes. So date of formation, when the company is formed, when the company is started, when the company is incorporated, naturally there is no profit. So we will take the pre-acquisition profit as nil. And if you see the date of formation PL is nil, and 39/2022 the PL is 80,000. There is no general reserve, there is no other reserve here. So as on the date of acquisition, that is the date of formation, and naturally as on the starting date there will be no profit. So profit is 0, post acquisition profit is 80,000. That is what the problem is telling. Now minority, if we less the minority 80,000, 25%, that is 20,000. So holding company share is 60,000. Right? This 60,000 holding company post acquisition profit. There is no pre-acquisition profit. Pre-acquisition profit is nil. So capital profit is nil and revenue profit is 60,000. The post acquisition profit is also called as revenue profit. Pre-acquisition profit is called as your capital profit. Now this 60,000 revenue profit will go to your statement 4, that is your holding company PL. Right? Now let us come to the statement 2, that is cost of control. If you see the balance sheet, cost of investment rupees 3 lakh, that is given in the A balance sheet of A Limited. Share capital 4 lakh 75%, This is your degree of holding, 3 lakh. Share of pre-acquisition profit. So pre-acquisition profit is nil here. Therefore, the share of pre-acquisition profit is also nil. Here it is nil. Therefore, it has been taken here as nil. So 3 lakh is the cost of investment. 3 lakh is the book value of investment in the company. Therefore, no goodwill, no capital reserve. Then we will come to the statement 3, that is minority interest. The share capital is 4 lakh, 25% belongs to minority, that is your 1 lakh. Share of revenue profit is 20,000, share of capital profit nil. Because post acquisition profit 20,000, pre-acquisition profit nil, therefore minority interest is 1,20,000. Then we will come to statement 4, that is holding company reserve. There is no general reserve, only PL is there. Therefore we have made only one column here. So profit and loss as on date of balance sheet of holding company. Holding company is your A Limited. If you go through the balance sheet of A Limited, you will see the PL is 4,50,000 and post acquisition profit, it is a revenue profit that will be added over here. So total comes to 5,10,000. From 5,10,000 the unrealized profit has to be deducted. So how to find out the unrealized profit? If you go through the adjustment number D, the stock of D Limited include 50,000 in respect of goods invoiced to B Limited from A Limited at cost plus 25%. That means the stock include 50,000 unsold goods, and on unsold goods the profit is 25% on cost. Friends, if you take cost as 100, you take cost as 100, profit is equal to your 25. So transfer price is 125. On 125, 25 is your profit. So if you make 25 by 125 into 50,000, the unrealized profit 50,000 into 25 by 125, so 10,000 is the unrealized profit here. 50,000 is the unsold stock. In 50,000 the rate of profit is 25 divided by 125. So 10,000 is your unrealized profit. Holding company share is 75%. It comes to 7,500. That will be less here. So your holding company PL will be 5,02,500. In this problem, two things are important. One is your mutual debt in case of bills payable and bills receivable. That we shall discuss before preparation of consolidated balance sheet. If you go through the adjustment number A, bills payable of B Limited comprise acceptance drawn by A Limited. So bills payable of B are accepted in favor of A Limited. So in A Limited it is bills receivable, in B Limited it is bills payable. Then another one very important new adjustment is given inside the balance sheet. there is a contingent liability in respect of bill discounted 40,000. Let me explain you. If you take the B Limited balance sheet, here it is your B Limited balance sheet, bills payable is bills payable 1,20,000. If you take A Limited balance sheet, bills receivable is 80,000. So, but the adjustment is telling these bills payable are all in favor of A Limited. But here only 80,000 is here. So, that means some of the bills A Limited received 1,20,000 bills. Out of that, 40,000 bills have been discounted with bank. So when a bill is discounted, we generally debit the bank account debit 40,000 to bills receivable 40,000 till the maturity of the bill. Till the maturity of the bills receivable, this 40,000 is a contingent liability, because at any time A Limited will have to pay to the bank in case the bill become degenerate on the due date, right? Therefore, this 40,000 has been out of bills receivable. 40,000 has been taken to bank, and this 40,000 is a contingent liability for A. So how to resolve this? These bills payable and bills receivable will be cancelled. Let us cancel 1,20,000, let us cancel 80,000. So 40,000 remaining here is included in the bank and cash. Here in holding company A Limited, balance with bank is 2,90,000. Out of that, 40,000 would be reduced for mutual acceptance. Then this 40,000, if we take it here, and 1,20,000, both will be cancelled. So we have to deduct from the bank, cash at bank, 40,000 from A Limited while preparing the balance sheet, and these bills payable and bills receivable will be cancelled. So bank account in case of A Limited will be reduced by 40,000, so that this 1,20,000 and 1,20,000 will again be cancelled, right? This is one of the important point. Another point is your in B Limited, A Limited liability side there was 75,000. In B Limited asset side there was 75,000. This is a current account, but the amount are same. Liability side 75, asset side 75. These current account are automatically balanced. So since the current account is automatically balanced, therefore these two will be eliminated in consolidated balance sheet. So friends, these two adjustments are to be kept in mind while preparing your balance sheet. So let us go to the balance sheet right now. So this is the consolidated balance sheet as on 30/9/2022, and let us start with this, that is capital and liability shareholders fund. We will take the share capital of A Limited, that is holding company, so 8 lakh, and reserve, under reserve and surplus only one item is here, that is your PL statement of PL, it has come from the fourth statement, that is statement of PL 5,02,500. Then loan, that is your long term loan is your 3,005% debenture, 3 lakh accrued interest we have added here, so 3,07,500. Then current liability trade creditor is given here, and there is no mutual debt, 5,10,000. Bills payable, that is B Limited 1,20,000, mutual acceptance 1,20,000 as per adjustment, that is 1 nil. Then minority interest is 1,20,000, so total comes to 22,40,000. So let us continue the assets below the liabilities. So asset will be tangible asset, land and building, here 7 lakhs, plant and machinery 3 lakhs, and investment is 1,000 debentures in B Limited. Here there are 3,000 debentures, 3 lakh, and A Limited invested in debenture of B Limited, that is your 1 lakh, 1,000 debenture. So debenture, here it is a liability, here it is shown as a asset. So we are not changing the debenture, or that is not making any adjustment in debenture. You can also show it separately, that will be easier for you. You can also bifurcate it, but I will tell you that you show it separately. Stock, you can write it as inventory. Also stock A Limited, B Limited. Unrealized profit 7,500, that you have to deduct here, so that it comes to 1,98,500. This will be your stock or inventory. Debtor A Limited, B Limited 4,64,000. We will continue the asset here. After debtor, I have taken it here, bills receivable 80,000, mutual acceptance 80,000, so nil. Cash and cash equivalent A Limited, B Limited, bill discounted 40,000, that is included in the cash of A Limited. So 40,000 we will deduct here, it comes to 4,77,500. Friends, 1,20,000 bills payable cancel. This 1,20,000 is adjusted like this in the asset side, that is bills receivable 80,000 and bill discounted, that will be deducted from the bank, it is 40,000. So this total 80 plus 40, it gives you 120. Similarly, the asset and liability both are tallied. So friends, we will continue with more number of problems, so that you will have a total course on holding company. Anybody, they can start holding company with me, they can get full mark also in the exam. So friends, if you like the video, please subscribe, offer comments, share with your friends, right? Thank you for watching.